Hello and welcome to this week's LOLC Securities Weekly Market Roundup. I'm Tharadu Amarasekara.
And I am Megara Vijayamana. This is the sound of profitability. Sri Lankan tourism sector is set to celebrate a record-breaking January in 2025. Based on daily arrival trends, approximately 253,000 tourists have been expected to visit the country as of 31st January.
From January 1st to 26th, 212,838 tourists arrived, with an average daily arrival rate of around 8,000. The previous record for the highest number of January arrivals was set in 2018 with 238,924 tourists visiting the island.
Sri Lanka's private credit expanded by 789.6 billion rupees in 2024 compared with the contraction of 47.7 billion rupees in 2023 according to official data.
The 2024 number is just short of 810 billion rupees recorded in the crisis year of 2021, where large volumes of money was printed through direct and open market operations to keep policy rates down, triggering parallel exchange rate or a loss of confidence in the rupee. At the time, the rupee was around 200 to the US dollar, and it is now 300, indicating that the cost of an investment would now be at least 50% higher, not counting inflation created by the Federal Reserve in building materials. Out of the 789 billion rupees of annual private credit, 583 billion rupees came in the last 5 months of the year.
Sri Lanka's long-awaited decision to lift its 5-year ban on vehicle imports has sparked mixed reactions from industry leaders, emerging concerns over affordability, taxation policies, and broader economic impact.
Importers are welcoming this decision but worry about affordability. New rules limit imports to vehicles under 3 years of age, which raises prices. The Vehicle Importers Association Lanka suggested a $1.2 billion cap and a 5-year age limit to balance cost. The chairman of the association, Indika Miranchige, cautioned that under the new system, an ordinary citizen would struggle to buy a vehicle for below 10 million rupees, whereas maintaining the previous 5-year limit could have kept prices between 6 million to 6.5 million.
The current average time that the BOI takes to respond to an investment application is around 80 days. According to President Anukumara Dissanayake, they hope to slash this to 2 weeks and also speed up other clearances and approvals in order to respond faster to those interested investors.
At present, securing approval for an investment requires clearance from 82 different institutions over 2.5 years. 11 institutions are involved and 269 days taken for environmental approvals alone, but the new government plans to reduce it to less than 82 days. The president is also confident of the country achieving over 4% economic growth in 2025.
Here's Megara with this week's corporate highlight of the week.
TJ Group, Sri Lanka's first multinational textile manufacturer, has announced a year-to-date profit after tax of 1.9 billion rupees for the third quarter for the financial year 2024-2025.
Group revenue reached an impressive 49.8 billion rupees for the period ending 31st December 2024, reflecting a 10% growth compared to the previous year. The group managed to navigate the continued price pressure through recovery in volumes, improved productivity, and focused cost reduction initiatives. The gross profit for the period surged to 5.4 billion rupees, representing a 57% improvement year-on-year, while TJ Lanka PLC also reported a strong balance sheet, ending the third quarter with cash and cash equivalents of 8.4 billion rupees.
News on the ESG sector. Sri Lanka's Hales Fentons will be awarded the 50 megawatt wind power plant in Mena, which they will be providing the units at 4.65 US cents each. This is according to the Secretary to the Ministry of Power and Energy, Udayanga Hemapala.
The Hades bid was excluded initially on technical issues. The plant is going to the firm following an appeal board process, according to the officials. The Mana wind system has high energy potential, allowing lower prices, and the Ceylon Electricity Board's 103.5 megawatt plant is recording over 40% plant factor after bird radar. When the radar detects birds, it stops the turbine, halting energy production.
This is the international highlight of the week.
As Donald Trump's trade war rages on, shares have fallen across Asia and European regions, while the trade wars are mainly focused via tariffs on Canada, Mexico, and China. Donald Trump has promised tariffs against the EU nations as well. In retaliation, Canada, Mexico, and China has already announced retaliatory efforts of tariffs against US imports to their nations.
Canada and Mexico are major suppliers of US agricultural products. The tariffs are also expected to hit the auto industry hard, since automakers and suppliers produce components throughout the region. Analysts have warned that hiking import tax on crude oil from countries like Canada and Mexico threaten US energy prices too. Nearly 60% of US crude oil imports are from Canada, according to a Congressional Research Service report.
And that's it for this week's LOLC Securities Weekly Market Roundup. No matter what investment decision you make it with the right intel. We will see you in a brand new week.